Hello guys, welcome again to another BTC update. I hope you're doing great today. We have another nice update for you guys today for BTC. We're going to do some macro and micro analysis for Bitcoin and see where this is heading. So stick around to the end of the video and yeah, let's get started with the charts. So first of all, let's start with the micro first, even though the macro is more important. But you know, the micro is something that is happening currently, so we need to watch out for that very well. So first of all, Bitcoin micro indicators are still showing upside for BTC. Usually what's happening with BTC right now is you are basically retracing to the EMAs, specifically to the 4-hour 10 EMA, and just bounce again and again and again. And you can see here since the breakout, Bitcoin just goes up, goes for that 10 EMA on the 4-hour chart, and then bounces, goes to the 10 EMA, bounces, goes to the 10 EMA, and bounces. And that's what's happening right now for BTC. It is just continually following this pattern formation on the 4-hour time frame and just pumping up and up and up. Now, one key thing to note is that even if you do lose this 10 EMA on the 4-hour chart, you're still bullish unless you close under 42.5, which is the 20 EMA on the 4-hour chart. Now, just keep in mind you're still bullish on the 4-hour time frame, which translates to the next couple of like 24 to 48 hours basically. So maybe if you do start closing below that EMA, then you might flip bearish for a short time. But all in all, the general direction of this move is still up in my opinion, even though right now we experience a heavy rejection around 45,500, which is a key level of liquidity. I posted this on my Twitter not too long ago. 43, I think it was 43.5 to 45.5. This region is a very trappy region, so if you get stuck here, it's very bad for BTC. It's like basically we are in no man's land right now. We break below this and we start to close under, then most likely this can also go back all the way down to 37 or 39. And if we don't, and we rip above and we hold this as support, then most likely my midterm bull trap target of 47,000 is going to be in play, in my opinion. Now, if you go to the volume profile on the 3-day chart, so this indicator kind of shows you the amount of traded volume over a specific range or period of time. And you can see right now between 37,800 all the way up to around 47,000, even 48,000 is empty space. So not much volume of trade happened here basically. So this is basically like a free area to just go up. So what I'm expecting right now for BTC is probably a retest of this area and then a rejection here. Now, the rejection could be a 4 to 6K rejection, so you could go all the way to 47 and then start to correct to like 43 or 42, and then basically continue to the upside one more time to 52 and then drop. And now, why am I saying drop? I'm gonna explain why, but this scenario that I'm showing you right now, which is something that looks like this is basically the best case scenario for Bitcoin bull trap, where basically the trap will kind of give you more than what is expected. So 47 is the key area of the bull trap, and sometimes these bull traps do tend to go slightly higher or slightly lower. But yeah, this region right here is a warning region, and this region right here is a warning region. So you need to be very careful when BTC is right there, because the rejection that I'm expecting to happen here could be a rejection that could take you all the way back to 37. And if that happens, that's really bad, of course. We should hold key support levels on the drop, specifically $40,000 or 42.6 at least, in my opinion. We should hold that region in order for us to see more upside. If we don't, then most likely this will go down and test $31,000 again. So yeah, it's gonna be very interesting to see how Bitcoin manages to climb above this area. Now on the weekly time frame, which is the macro perspective, let me just show you. So these EMAs right here are the 18 and 30 EMA on the weekly chart. These EMAs usually, when they cross bearish, you enter a bear market, sorry, and when you cross bullish, you enter a bull market. only exception was the COVID dump, but the COVID dump, it is a black swan. It is an anomaly. They were already bullish here and then they flipped to bearish here, but the start of the bull run was here in May 2019. And here it was just an anomaly basically. But if you scroll throughout your charts, you could see they crossed bearish, they never crossed back again till the start of the bull run. Even in 2014, I'm gonna just show you. They did a fake out here, bull trap, and then they crossed bearish, and then here you tried to basically climb above them, as you can see, and then you dropped again. And you kept doing this till you finally crossed bullish again, and this was the start of the bull run of the 2017 bull run in October 15. 2015. Sorry. And this works for everything. Like for example, here on this fake out right here, they didn't even cross bearish. So if you were back in that day in crypto and you were using technical analysis and then you spotted this pattern on the 18 and 30 EMAs on the weekly chart, you'll probably know that this is a fake out. It's not a real top. And yeah, this just works perfectly everywhere, like throughout the ages. Since the inception of BTC, this is a good indicator to indicate if there's a bull run or a bear market. Now, one thing I do want to point out is the 2017 bull run, which is very similar to what's happening right now in regards to price action. As you can see here, they crossed bearish and then you pumped, and then you pumped all the way up to, well, let's see how much percentage this is. Around the 9% pump above the EMA cross. And then the second week, you just basically dumped after. And if you take that 9% and you put it on, so this is the EMAs right here, which are coming in around $47,000 exactly, by the way. So if you take 9% to the upside, it gives you 50K. So 51, 52K. So and because this time it is different, right? It is different. Whether we want to believe it or not, it is different. This can flip for unknown reasons, right? This could be negated. And like I said, this will be negated if you start getting distance above this region. So for example, if you see BTC above $50,000 on the week and closing weekly candles above $50,000 for at least 2-3 weeks in a row, just closing above 50 and steadily climbing, then that most likely signals the resumption of the bull run. But I honestly don't see it right now, unless something drastic happens. We also have something very bad on the monthly time frame, which I discussed about. By the way, this is I talked about earlier. We have this bearish stochastic cross confirmed already to signal line and MACD line below. So this usually indicates that you are in the bear market already, and throughout history it's 100%. You have a bearish MACD cross default setting also. So if you don't know this, the default setting for the MACD is basically like how to put it simply so you can explain it. If you adjust the default setting to like 535.5 for example, it makes your MACD faster and giving you a signal, right? But because it's faster, it's also more volatile, so it can switch up and down very quickly. But when you use the default setting, so it means that once these cross, it's like you're crossing with a lag also, so it's a legit 100% cross. This MACD is very, very reliable in my opinion. So this MACD cross is very reliable in my opinion, the monthly. So this is another bearish indicator that is very, very bad. And obviously the monthly MACD right now is exactly at 50K, at 50 RSI. Sorry, the monthly RSI is exactly at 50. So all in all, it's not looking too good for Bitcoin. Now, keep in mind one thing though, and I'm going to be very, very clear about this because people tend to overthink a lot when technical analysis is being spoken out there. On the daily, going to 52, right, is different than watching it on the weekly. So one weekly candle or one monthly candle like this, as you can see, right? We pumped around, I don't know how much was that, like maybe $14,000. Everybody saw that pump on the daily time frame and they saw it was, oh my God, but on the monthly, it's just a small candle. You see? So what I'm trying to say is a lot can happen on the weekly time frame. A lot. So this 1 week candle that is like this could be formed of a zigzag pattern of going up to like a 50 dropping to 40, going to 42, dropping to 39, and then finally closing at 50. And then for you, it will just look like this, like a normal candle. But inside the candle, right, there's a lot of price action happening. Now, this is what I want. This is what I want to talk about. I'm not expecting BTC to fake out like a 2 weeks and then drop. If it does that, it's gonna be very, very severe. It's like history repeating itself. So I'm giving it the benefit of the doubt, and I'm saying that okay, history is not repeating itself. So I'm giving it around 4 weeks of this choppiness consolidation type of scenario between 52 and 47,000 before a legit drop. Now keep in mind this can flip in a second, especially when you start reaching those resistance areas that we talked about. So especially when you start to reach that $47,000 resistance area and that $50,000 resistance area. So these are bull trap areas. And in my opinion, it's going to be very, very, very interesting to see what Bitcoin does, because I'm not sure if history will repeat itself or not. If we base this only on history, then I will probably just tell you, okay, Bitcoin's going to 50 by the end of next week, and then the following week it will drop down to 40, and then the following week it will drop down to 30, because it's history. But I cannot do that, and I'm just trying to give you my unbiased analysis for BTC. So for now, to keep it simple, the daily time frame and the 3-day time frame are showing upside. There are a lot of bearish divergences, by the way, on the 3-day chart, on the daily chart. So it's basically the price is pumping, but you're forming a divergence. So for example, here you have a high at around $52,000. So you can see here your high on the RSI. And now on the 3-day time frame, we are around $45,000, and we have a higher high. So we have a high, lower high, high, higher high. And this is called a hidden bearish divergence. And this just basically means continuation of the downtrend. So if you're doing this, then you're going to do this again, and then continue down till this flips basically. So yeah, and right now we are at the key area of resistance as well. So it's getting very, very interesting for BTC, and I would urge anyone who's watching the video to think smartly and to think properly about how to manage their portfolio and their investments. I don't want to scare you. I don't see any drops right now, any severe drops right now. It could happen in around 2 weeks or so, another proper pullback, which is probably going to be that 4 to 6K drop from 47. But as of yet, I don't see anything worrisome yet. But if I do, I will definitely let you guys know. One last thing to note before I finish the update is that, let me just show you. So if you go to the weekly time frame, and I'm just gonna remind you this because it's very, very important for me to basically summarize my videos at the end. So just to keep it very, very clear. For now, if we want any chance of BTC to do that proper bull trap to 47, I would like to see it close a daily candle above $44,000. That's number one. If you close a daily above 44,000, then most likely you will see 47,000 down the road. So in a week or two maybe. Now that's the first. Second thing is, if we do have a rejection around $47,000, I would like BTC to hold at least above $42,000 in order for it to give us a max pain region of $52,000 or $50,000 for that bull trap. If BTC fails to hold that 42.6, especially 40K, right? Especially 40K. If BTC fails to hold that region, then most likely the bull trap will be finalized, and then you'll see more drop to the downside. Now, what are the invalidations? How can we basically say that we are in a bull run again? Well, basically, the only way, in my personal opinion, is these switch back to bullish. They cross bullish again. That's the only way this happens. And the only way these two cross bullish again is if we can close weekly candles progressively above the EMA. So the EMA is right now, the cross is around 47. So if we can manage to close at least more than 2 to 3 weekly candles above the EMA, and most preferably a monthly candle, because the monthly is very important as well, by the way. I'm gonna explain one more thing for you. So the monthly right now, BTC is finding such a hard resistance, or such a hard job climbing here because this is the monthly 5 and 10 EMA. So as you can see here, we got rejected over the monthly 5 EMA around 45,500. And that monthly EMA was, so it was resistance here, it was resistance here, and then finally it broke out here. So basically a month it tried to climb above this month, then the second month it dropped below and then pumped above, and then on the third month it tried to again climb above it, and so on and so forth. You get where I'm going with this, right? So it is a strong resistance right now. So if BTC wants to have any chance of again resuming the bull run, if we start to see monthly candles closing above this EMA, which is coming in around 45,000, at least 2 consecutive bullish monthly candles with higher prices. So not same close, like a monthly close at 47 and a monthly close at 52, let's say. If we start to see that, then the potential of this bull run to resume will become higher and higher, for sure. If not, if we don't do that, and if we close below them, such as what we're doing right now, so this is a monthly close, it's still not there yet, so it will close on the 28th of February. But if we close the monthly below this EMA, is going to get very, very ugly, because you can see another potential retest of $38,000 or $37,000, maybe with a slight wick to the downside. But I don't think if that happens, I don't think basically I think you will see more downside than upside. So your bull traps will be limited and your downsides will be greater. And down the road, if you already know my prediction that I think that BTC will probably see $23,500, but this is a big if we tap 30. So if you see someday Bitcoin around $30,000 again, then I'm telling you 23.5 will be there next. It will be the next target down the road. But yeah, guys, that is the analysis for today. I hope you enjoyed it. Just to do a quick summary on the micro time frames, we're still bullish, just a few pullbacks to the 10 EMA on the 4-hour chart. On the daily time frame and the 3-day chart, we are still bullish, and I think we're headed towards $47,000 BTC. But I would like to see a 44K daily close above 44K, basically, for that validation of that scenario. And on the macro time frame, I still think that BTC is bearish, and I think we are in a bear market already, and we are going to that bull trap region of around 47 to 52,000 BTC. It could be give or takes a few $1,000s. I cannot be super accurate. It is probabilities at the end of the day. It is TA at the end of the day, but I'm trying my best to give you a clear outlook of what happens. Invalidation for me will only happen if BTC can close at least one monthly candle above, 2 monthly candles above $45,000 or $46,000 to be just safe, on the safe side. Or that would translate to at least four-week candles progressively closing above $45,000, or $46,000. So yeah, guys, that is it for the update. I hope you did enjoy it. Please like, please share, please subscribe. Please follow me on Twitter if you still haven't. The link is in the description below. If you want to inquire about my private Discord group, link also in the description below. You can message me on Telegram, and I'll probably reply to you with anything. And yeah, guys, thank you again for watching the video, and I'll see you again next week. Bye-bye.